Alright, welcome back to JYR Trades. Today is Monday, March 23, and what a Monday we had, right? If you guys were paying attention to this morning, we had a massive, almost 1,000 point candle early in the morning. That definitely, if you were here and you were trading long, and you could have literally made a year's salary, right, with that type of candle. But Asia started with a 300 points, almost a 300 point 1 minute candle, which was huge by itself, and that kind of got things going. I expected London to possibly kind of continue, to the downside, and then at some point something happened. I don't know if it was a tweet from President Trump or what, but that was a massive candle that kind of got things going. So I was not expecting New York to have a massive move because of this move itself. I'm like, New York is not going to be as impactful, but it's still going to make some kind of a move. So let's go ahead and start by talking about how was New York about to open. So when price was about to open at 7:30 a.m., all right, we opened outside of New York value. This white line and this white line represent the previous New York value here. And so being that we open outside and above, I expected some type of move to the top side. Okay. However, when you look at the mids, all right, we have Asia mid and London mid. Asia mid is leaking south outside of price. London, I'm sorry, New York mid. I just felt like there was going to be some type of push to the downside eventually. Okay, there was unfinished business to the downside, and so with that said, let's see what happened here. Now remember, I told you that on Thursday I had a major lesson. My number one rule is I wait for my Remitar program right here. This dotted yellow line. This represents the fair auction zero, or the fair value zero. This is where buyers and sellers agree on price. And so I don't trade until we get a post migration. Now after post migration, that gives me the new zero. Okay, at that point I can go ahead and put my fib. All right, and how do I create my fib? Well, I simply measure the entire session from London and Asia. In this case, it was really all of London here, and whatever that number is, I divide it by 2, and that's my measurement of my fib from 1 to 0. Okay, and so I put the 0 there. This box here that I create here is a 120 point liquidity box. Okay, usually Nasdaq has a tendency of ranging within that box whenever it's trying to balance itself. Sometimes it'll range within the box, all right, and then might get out and then come back to the other side. Or once it starts making some movement outside of the box, that's usually an indication that we're in for some type of move in that direction. All right, now being that we opened outside of the value, north of the value, I expected initially move to go to the top side. However, because the mids were kind of leaking south, I felt that there was going to be some type of pull to the downside or unfinished business to the downside. And so let's see what happened. All right, now once I got an entry here for a long, now when I get an entry for a long from my program from Remitar, it doesn't mean that I am right away going to go in right away. So one of the things that I look for is, if it's telling me to go long, am I within the box or am I outside of the box? Today's range was extremely large, so chances are that we were going to go outside of the box right here. And so price, as you can see here, ended up retracing to the 12. All right, went up again, retraced to the 12 one more time, and then from there it kind of took off there. Right now, what I am noticing here is when I saw this happening, I had to make a decision. Okay, once we started breaking outside of the box, I felt like, okay, I can wait for a reclaim or a retrace here, which it did, and then I go in, or I wait for a second reclaim, right? Here particularly, guys, I'm gonna be honest with you, once I started to see that we were going outside of the 12, outside of the box, I felt comfortable. I felt comfortable going in, just because of the way the fib was large enough. Okay, it felt like it was a steady move up. You know, it felt like it was gonna be a steady, the tempo going up, coming back down, going up, coming back down. And so I went in somewhere around here, okay, and I put my take profit right before this level, which is previous day high. Now the reason why I did not feel comfortable targeting the 50 at the minimum, or even London high, was because of this ridiculous move. The way the market stretched right here, I'm like, I don't think New York is gonna have enough push to push all the way up here, honestly. And so with that said, I looked at the next closest level and previous day high. I'm like, I'm okay with this, and I put my take profit right around here, okay, and it did hit it. Okay, so this move ended up being close to about 70 points, maybe a little bit more. I don't remember exactly where I entered off of the top of my head, but it was somewhere around here. And you can see that's about 73 points, made about $1,800 on that move there. And I was okay with that. Okay, now price ended up, you know, tagging that previous day high, came back down. Okay, came back up again, but once it exhausted and hit that ceiling that second time, with the mids being down here, you all remember I said we have London mid, and then of course we had Asia mid down here. I said there's unfinished business to pull down. Now, doesn't mean it's gonna go all the way down. When the mids are below us and we open, New York opens outside of value and top side, it doesn't mean automatically because the mids are below us that we're gonna automatically dump right away. That's where the patience comes into effect. We have to wait. We have to look at everything, right? There's different, every day the market's going to give us a different disguise. In the end, the behaviors it's going to be the same thing. It's going to look for value, all right? Accept that value, and then explore that value, right? And so right here, it had accepted value here. And once it started going past the 12, I had to make a decision, right? And I felt comfortable with it, okay? And went with it, took my take profit where I felt it was good enough. And thankfully, I'm glad I did, you know, stop here, because if I had targeted the 50, it would have never reached it. I could have maybe held on to it here. And once I saw that maybe here would have stopped, coming back down again, previous day high, maybe that would have been an exit, right? But anyway, so I exited here, and once price started to, it hit that ceiling twice. I think this is a ceiling, the resistance here. Really, it was time for it to come back down. Now, I do have a couple of EMAs here. This yellow line represents the EMA 20 here, okay? And then this one is the trend EMA, trend duration forecast from Chart Prime. And once it started getting reddish here, this red line, it's letting you know we're bearish here. But I mean, just like here, it got bearish and then it started coming back up again. I have my reservations, you know, when I see this right away. So I've been working on my Remitar. Remitar is my own program that I've been working on here. And these two right here are basically this here, all right? And this one gives me the label. It's not perfect by any means, but this version 2 that I've been working on, I'm still working on this version, but this one here gives me these 3 type of EMAs here. And the one thing that I notice is that once it crosses that white line, okay, really that's when we know we're in business for a short. We see here that when it tagged the white line here, right, this would have actually been an entry on the pullback towards that long. Here it would have stayed, staying above it. That means we're still bullish. But once it crossed here, this was bearish. And right here, guys, we're going back into the liquidity box, going back into the auction zero. I would have targeted from this location here. Honestly, I would have targeted right here, the edge of the opposite side of the liquidity box. And when you measure that, I mean, that itself is 151 points. That's double of the size of the move that I went earlier in New York. Now, interestingly, you'll see that my lines go flat once New York PM starts, right? So I'm working on that too. I'm gonna be working on that because I want to be able to keep them active during New York PM, because this tells me that this line here eventually would have probably crossed somewhere around here, and that would have told us, hey, we're back in business for longs. But yeah, today was just an overall New York PM kind of rebalance, mean reversion balancing right here. You can see here, once it went back to the auction zero, rejected once again sharply here. But yeah, overall today was an interesting day overall. I think every day the market gives you a different disguise, and the key thing is you have to be patient. If you know your edge. For me lately, like I said, my number one rule has been waiting for that post-migration zero, because that post-migration is going to really give me an understanding, where are we, where's our liquidity. When I get that post-migration, I get those 60 points up, 60 points down. This is where liquidity is, and once it gets that liquidity balance itself out, it's going to make a move either up, outside, or inside. If we are on a true rotational day, which means that price opens inside New York value, inside the mids are centered within New York value, chances are you're going to rotate somewhere within that box, okay, and so on. But that's pretty much it, what I have for today, guys. I know it's a short video, it's quick. Hopefully you found good educational content with this YouTube channel. I'm not here to give big flashy numbers. I am trying to learn market structure, something that is going to be sustainable over long term. I'm not trying to do fancy retail strategies, none of that. I'm actually trying to learn market structure. The market has a conversation with us every single day. It's up to us to figure it out, to learn what it's telling us, where to go, and for us to be patient for it to show its hand, and to be ready to go in when it's giving us a permission to make a move. So with that said, guys, hopefully you guys enjoyed this episode on JYR Trades. If again, everything that I post here is for educational purposes, it's not financial advice. But if you do enjoy the content and you want to continue learning on this journey with me, please do subscribe, like, share, and comments. All right, on the next one.